Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate mumbo jumbo. Today, we're diving into a recent report from BioAffinity Technologies. Don't worry, the name sounds complicated, but we'll break it down. It involves lung cancer tests and some cost-cutting measures, so let's see if they're cutting corners or just getting smart. This report, a Form 8K, is basically an update on some important stuff that happened at BioAffinity Technologies. The key date to remember here is March 6, 2025. That's when the events being discussed actually took place. BioAffinity Technologies, Inc. is the company we are talking about. They're incorporated in Delaware and they have a file number and tax ID, which is required for all companies in the US. This is important. BioAffinity Technologies is considered an emerging growth company. This means they get some breaks on certain regulations, giving them more time to get things in order. So what's the big news? Well, on March 6, 2025, BioAffinity Technologies announced they're making some changes to save money. Specifically, they're aiming for about $4 million in cost savings at their subsidiary, Precision Pathology Laboratory Services, or PPLS for short. At the same time, they plan to invest more in sales growth for their CyPath lung test, which is designed to detect early-stage lung cancer. This can be a good move if implemented correctly, as it means the company will be more focused on making money rather than spending it. How are they planning to save all that money? Firstly, they're cutting labor costs, including reducing the workforce at PPLS by roughly 38%. Secondly, they're working on being more efficient, such as lowering direct costs for supplies and services. And thirdly, they're focusing on the most profitable services and stopping some of the less profitable pathology services. It sounds like they're trying to streamline the business and prioritize the areas with the highest potential. It's important to note that this information isn't officially filed in the same way as some other reports, meaning it has a slightly different legal standing. Also, the company included a safe harbor statement, which basically means they're saying some of their statements are forward-looking and could change. This section is essentially repeating the same information as above. On March 6, 2025, the company issued a press release announcing that it was implementing targeted actions to deliver approximately $4.0 million in cost savings. Here we find a list of exhibits, including a press release and some interactive data files. These provide more details about the announcements. The most important one to mention here is a press release issued by BioAffinity Technologies, Inc., dated March 6, 2025. Now, let's step back and think about what this all means. BioAffinity Technologies is making some significant moves to cut costs and focus on their CyPath lung test. This could be a smart strategy, but it also comes with risks. Laying off employees is never easy, and it could impact morale and productivity. Also, focusing too much on one product can be risky if that product doesn't perform as expected. From their reports, there are a few key things to consider. First, the $4 million in planned cost savings could significantly improve their bottom line. However, achieving those savings depends on successfully implementing the workforce reduction and efficiency improvements. Second, the focus on CyPath lung suggests they see a big opportunity in early lung cancer detection. But this market is competitive, and they'll need to prove their test is better than the alternatives. Looking at their current standing, BioAffinity seems to be trying to navigate a tricky phase. Emerging growth companies are prone to be doing this sort of activity, but that does not mean that this strategy would actually yield anything. It all comes down to how well they execute their plans and how the market responds to their lung cancer test. In conclusion, BioAffinity Technologies is at a crossroads. Their cost-cutting measures and focus on CyPath lung could set them up for success, but they also face significant challenges. Keep an eye on their future reports to see how they're progressing and whether their strategy is paying off. Thanks for watching, and if you enjoyed this video, please like, comment, and subscribe for more corporate decodings.